Ondas Holdings Inc., trading under the ticker symbol ONDS, closed its most recent trading session on Friday, April 24, 2026, at a price of $10.55 per share. The market is currently closed today, Saturday, April 25, 2026. During that final session of the week, the stock saw a slight intraday gain of 0.09%, reflecting a period of consolidation after a week of intense volatility, where prices swung between a low of $10.12 and a high of $10.77. While a 10-cent move might seem quiet to the casual observer using a standard trading platform, the reality under the surface is anything but calm. Most investors look at Ondas and see a speculative drone play struggling with profitability, but the real story right now is a massive structural shift in their business model that the broader market hasn't fully priced in yet. On the very day of this last closing bell, Ondas finalized a $175 million merger with Mistral, a U.S. defense prime contractor. This isn't just another small acquisition to add to a portfolio. It's a move that gives Ondas direct access to over $1 billion in U.S. Department of War programs. This effectively transforms them from a technology vendor into a primary defense contractor with a seat at the table for long-term government contracts. The common narrative surrounding ONDS is that it's a high-risk microcap stock prone to wild fluctuations, often lumped in with other speculative names you might find on a typical online investment site. People expect it to burn through cash while chasing small commercial drone contracts that may or may not materialize. However, the reality of their recent pro forma backlog, which now sits at roughly $457 million when you include Mistral and their recent Worldview acquisition, suggests a company that is rapidly maturing into a serious industrial and defense player. We're seeing a divergence where the stock price is treading water around the $10 mark, while the internal fundamentals and contracted revenue are scaling at a triple-digit percentage clip. This creates a tension between the growth at any cost reputation and the emerging reality of a company that is beginning to secure the kind of steady, high-margin government work that usually earns a much higher valuation multiple. Looking at the immediate trading activity from this past week, we saw significant institutional interest, though it has been a mixed bag. Total institutional ownership now sits near 32%, with heavyweights like Goldman Sachs and various specialized ETFs holding positions. However, the volume during the last session fell even as the price nudged higher, which often signals a temporary exhaustion among buyers or a wait-and-see approach before the next catalyst. It's a classic setup where the retail crowd on the Robinhood app might be focused on the daily percentage moves, while the institutional desks at Fidelity or Schwab are likely watching the integration of the Mistral merger. Trading volume has been healthy, averaging over 40 million shares a day recently, showing that liquidity is not an issue for those looking to build or exit large positions. If you look at the price action from the start of April, the stock has moved from roughly $8.80 to this $10.55 level, surviving a dip towards $7.78 in late March. This shows a resilient upward trend, even if it feels like a roller coaster for those checking their portfolios every 10 minutes. The technicals are currently painting a fascinating picture. ONDS is holding a sell signal from its short-term moving average, but a buy signal from its long-term average. This often happens when a stock is in the middle of a major transition. It's caught between the gravity of its past performance and the momentum of its future potential. The stock found support at the $10.03 level earlier in the week, and every time it dipped toward that mark, buyers stepped in aggressively. This suggests there is a floor being established by smart money that recognizes the value of the new defense contracts. On the flip side, resistance is sitting right around $10.67. For the stock to really break out and challenge its 52-week high of $15.28, it needs to clear that $11 level with high volume to prove that the Mistral merger is being taken seriously by the market. Beyond the numbers, you have to look at what Ondas actually does to understand why the market is so divided. They operate through two main segments: Ondas Networks and Ondas Autonomous Systems. The network side is the backbone, providing private wireless solutions for critical infrastructure like railroads. Think of it as the industrial internet that allows trains and sensors to talk to each other without relying on public cell towers. But the real excitement, and where the volatility comes from, is the Autonomous Systems division. This is where their drone-in-a-box solutions live. These are fully automated systems that can launch, fly a mission, and land back in a docking station to recharge without a human pilot ever touching a controller. This is being used for everything from demining operations on the Israel-Syria border to protecting high-value industrial sites. Comment below how many shares of ONDS you currently hold, or if you're waiting for a specific price point before jumping in. The merger with Mistral is the bridge that takes this technology from the cool tech category to the essential defense category. Mistral isn't just a partner, they are a prime contractor with decades of experience navigating the labyrinth of the Pentagon. By bringing them into the fold, Ondas isn't just selling drones anymore, they are selling integrated land and air intelligence platforms. This includes autonomous ground robots and counter-UAS technology. In a world where drone warfare is becoming a central part of every modern conflict, having the ability to both deploy and defend against autonomous systems is a massive competitive advantage. They recently received a $10 million initial order as part of a $50 million demining project, which is just a fraction of the $1.7 billion Eastern Border Security Barrier initiative in Israel. These are not small one-off sales. These are massive multi-year infrastructure projects. If you are using an individual brokerage or exploring various investing sites to find the next big growth story, the bull case for ONDS is clear. They are at the intersection of AI, autonomy, and national security. Their revenue growth has been explosive, jumping from $5.3 million in 2024 to nearly $50 million in 2025, and they've recently raised their 2026 revenue target to at least $375 million. That is the kind of growth that usually gets investors' hearts racing. However, the reality check comes in the form of their bottom line. They are still reporting negative earnings per share, and their price-to-sales ratio is quite high, which means you are paying a premium for that future growth. The company strengthened its balance sheet recently, ending 2025 with roughly $594 million in cash, which gives them plenty of runway to integrate these new acquisitions without needing to come back to the market for a dilutive capital raise anytime soon. For the self-investing crowd or those using a SoFi trading platform, the risk here is execution. Mergers of this size are notoriously difficult to pull off perfectly. Integrating the culture of a tech-focused drone startup with a traditional defense contractor like Mistral takes time. If there are delays in contract awards, or if the integration of their AI-enabled command and control software hits a snag, the stock will likely face another round of selling pressure. We've seen insider activity being somewhat mixed, with some directors receiving restricted stock units while others have sold shares over the last year. It's not a clear-cut signal of all-in from the management team, but it's also not a mass exit. It suggests a team that is focused on the long-term grind of building a multi-billion-dollar entity. The macroeconomic environment is also playing a role here. High interest rates have generally been a headwind for growth stocks that aren't yet profitable, as the future value of their earnings is discounted more heavily. But defense is often seen as a counter-cyclical play. When the world feels less safe, defense budgets tend to grow regardless of what the Federal Reserve is doing with rates. This puts Ondas in a unique spot where it's a growth stock that behaves a bit like a defensive play. If we see a broader market pullback, ONDS might actually hold up better than other tech names because its revenue is tied to government mandates and security needs rather than consumer spending or advertising budgets. As we look toward the future, the primary catalyst for ONDS will be the Q1 2026 earnings report and the subsequent updates on the Mistral merger. Investors are looking for confirmation that the pro forma backlog is actually turning into revenue. They want to see if the system of systems approach, combining ground robots, low-altitude drones, and high-altitude balloons from Worldview, is actually a product that customers want to buy as a package. If they can prove that this integrated ecosystem works and that it can be deployed at scale, the current valuation might look like a bargain in hindsight. On the other hand, if they struggle to manage the increased complexity of their operations, the stock could easily slide back toward the $7 or $8 range as the market loses patience with the growth narrative. To summarize the situation, Ondas Holdings is currently at a crossroads between being a speculative tech firm and a foundational defense contractor. The closing price of $10.55 reflects a market that is cautiously optimistic, but still waiting for hard evidence that the Mistral merger will deliver on its billion-dollar promise. The expectation was for a volatile, cash-burning drone company. The reality is a rapidly consolidating autonomous systems leader with a massive government-backed backlog. While the short-term chart shows some indecision, the long-term fundamental story is being rewritten in real time. Whether you're tracking this on the Interactive Brokers platform or just keeping an eye on it through your Fidelity mobile app, the key will be watching that $10.67 resistance level. If it breaks, we might see a fast move toward previous highs. If it holds, we're likely in for more sideways grinding as the company works through its integration phase. Regardless of the daily fluctuations, the sheer scale of the contracts they are now bidding on suggests that Ondas is no longer just a big player in the drone space. They are positioning themselves to be a central part of the future of autonomous defense and industrial monitoring. The tension between the current market cap and the future revenue potential is where the opportunity and the risk lies for every investor watching this name. Maintain your focus on the execution of these defense contracts, as they will be the ultimate arbiter of whether ONDS is a long-term winner or just another high-flying tech story that couldn't quite stick the landing. The depth of their backlog and the strategic nature of their acquisitions suggest the former, but in this market, authority is earned through consistent quarterly performance, not just promising press releases. Keep a close eye on the volume and institutional flows in the coming weeks to see which way the smart money is leaning. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.